I want to add to this drawing a couple of details which would be kind of self-explanatory because of what I hope, because of what I've already said. So the one thing I want to add on there is the kind of building blocks of accounting, the threefold structure of accounting, and and for this, I would put here where trade is, income and expense accounts, because if you have a set of accounts, they're constructed of your trading accounts, your balance sheet accounts, and then at the end of the year, you have to close all these accounts. You have to do some kind of review of these accounts, and you close down your income and expense accounts. They go on the balance sheet, and then you set your final year balance sheet. You have to swear blind, not blind, you have to swear or make an oath or something in front of the tax person that these are accurate. And for that, you just have to think through them all, which is this yellow area here. And then you say, yes, these are accurate accounts, and you sign off, right? And then you're taxed according to your statement, at least in England. And it's important to say in England, from a tax inquiry or tax investigation point of view, the tax office will always assume you are the ground on which this information comes from. So you will have even if your accounts have been audited, the auditor will very carefully say, these, from my external point of view, my professional point, these are a true and fair record of that person's business based on the information that person gave me. I've done nothing to this information. And so the onus is entirely on the entrepreneur, the person whose accounts they are, to tell the truth in the English tax system. And if you're investigated or inquired into, the tax officer cannot gainsay you. He or she may be very doubting in you, right? Or especially if you have two of them and they play the good guy, bad guy, they're just trying to catch you out, and so on. But it's very important at this point in terms of sovereignty and individual responsibility that the tax system in England, at least, assumes you are the starting point. And it's not going to, even if it thinks you're not telling the truth, it cannot act on it cannot say you're not telling the truth. It has to prove it. And so I think you could say it's a trivial point, but for me, it's not a trivial point. At this point in human history, it's up to me to know my business. And then, in fact, it would be the case. I speak again from England, from my experience. If you're self-employed, you can self-assess. You don't have to get an auditor. The assumption is you understand accounting, that we've got all these software things. You may not understand how they work, but once you can learn them in the bagatelle way, you can just sort of put it in here, and if it doesn't go bing, if it won't let you continue, there's something you've got to learn, right? It's not so complicated, but it will do all the hard work in the background. You won't know what's going on. It will just tell you, put it in here and put it in there and so on. So with all this stuff, the days like 30, 40 years ago, when the individual could hardly know all this stuff, let alone do it, those days are gone. It's inside your smartphone. So today, there's no excuse for any individual not to know how to do bookkeeping or not to do bookkeeping, or have it done for him. And that's the assumption, I said, already 40 years ago, when the so-called neoliberals started to kind of open up national economies to the cold winds of the world and all this kind of story. Their assumption was, we've got to a point in history, or you have to be kind, their assumption was, we've got to a point in history when we have the technology, we have the skill level, we have the consciousness, we have the ability to run our own economy from ourselves without any agency. And therefore, we can now open the whole thing up because it will be controlled by this consciousness we now have and not controlled from outside by regulatory organizations. It's a bit disingenuous on their part if they were to look more carefully. But I'll just give you one example of this, which I think is it's real. And in those days, I think maybe it was the late 80s, can't remember now, maybe early 90s. Then Richard Branson, who's always kind of pushing the boundaries, he started a money operation, and you could get a mortgage from it was called the Virgin One account, and it was, on the face, it was a mortgage like any other. You had to meet certain conditions, typically 3 times your income. You could borrow whatever it might be, but then you borrow 100,000, and the deal was you borrow 100,000. You've now got 100,000 lent you against your house, in this case, right? When and how you pay it back, you're going to tell us. We have no schedule for this. You've got a debt. We've got your house, right? So you can do it over 25 years. You can do it over 10, 15. You can plan to do it over 15 and get lucky and do it over 10, or you can hit a bad patch and now you need to do it over 20. You can fix it. You can do anything you want, right, to get to the same place we will want you to get to by saying 25 years, 50% down, X% interest. Get to that same place. We're interested to see how you get there without us making you get there. This is a very important image, because he was just assuming his customers would do everything that previously would be done to them by the financial system. And I can give you a lot of other examples where where if you bring alongside, if you run alongside what was called financial liberalization, the Big Bang in 1986, and all these things that happened, if you assume the human being was financially literate, they would have a very different effect than when things were just prized open from outside before people were ready for this, and so on. And I mention this because with this, you can then get inside very recent history, and you can catch up on the problem of what happened when we were prematurely exposed to markets, or prematurely exposed to financial discipline, or amounts of capital or possibilities which we were just not educated to manage. And this is a large part of the modern situation. Since 2008, we were in a real mess, because things are just going all over the place, actually. And the only way they're going to be stabilized is by people getting clear financially in their own case, getting their own balance sheet in place. They're not ever going to be stabilized by central banks anymore. Those days are gone. Not by economic theory. Those days are gone. And almost by nothing, except my own discipline. So this is a very serious thing I'm describing here. And now I want to put on here then, where the red column is, income and expense accounts, everything to do with the bookkeeping when you're buying and selling stuff. And on the blue side, the balance sheet. All the assets and liabilities in your business will be on this side. And again, they're not of the same kind. At this point, your trading accounts, you open at the beginning of the year, you trade, and at the end of the year, you close them. Your balance sheet, you open it when you start your business, and you only close it when you finish your business, so it never closes. It's a bit like the financial markets. They never close. They're open 24 hours a day, 7 days a week. And that's a huge clue. If you want to understand the financial markets, learn how to be awake 24 hours a day, 7 days a week. Then you'll be a match for the financial markets. Until you know how to do that, you're not a match. The only way you can do that is, in Steiner's language, you have to cross the threshold into the spiritual world and stay awake. You can do this, but it's a thinking activity. I won't go into the details, but it's a very important thing. If you want to understand financial markets, you have to be able to be awake 24 hours a day, 7 days a week, or its equivalent kind of consciousness. This is a really important thing. And even when we say things like the markets are nervous, the nervous system is our consciousness, the ground of our consciousness. So when we say the markets are nervous, we don't realize we're being very precise about the nature of the markets. We just don't have the analogy to ourselves. And with these small little things I'm saying, we come up inside this whole so-called financial system, and then we see it's not a system at all. It's just a reflection of the way we are and the way we behave, and whether we're aware of this or not and can manage it. And then the third thing up here would be the closing entries, because at the end of the year, you close all your accounts. The difference between income and expense is added to your own capital account. And then you have a restated balance sheet. Your assets equals your liabilities, but hopefully you have an increase in capital, and therefore you have an increase in cash. And if all that's right, you've just closed your accounts. You've completed the closing entries, and you can tell the world it looks like this. But when you do that, this account will have gone. You will only have a balance sheet to show the world. And you can call up a set of accounts. You will see you will be first shown the balance sheet, because this is subsidiary information. It's gone. You know, the house you still have on your balance sheet, you still have. The apples you bought or the electricity you bought is gone, along with the money. So in this way, I'm trying to give you a kind of crash course in accounting, finance, and then you carry on. So if for the moment, just imagine on here I've put income and expense account, balance sheet, closing entries. Now you have the whole financial structure, the threefold structure of accounting also hidden inside this drawing.
Yeah.
Meaning, if you trust to this structure, you can't, if anyone can find another way of structuring accounting, let me know. I'm very confident it has this very clear structure. And that means in this image, it's constantly teaching me, allowing me to see. So if you want to get real traction in the modern financial system, you do it through bookkeeping, because because everyone can do that. It has a science of itself, of its own. It has a logic of its own. And nobody can claim they invented it, and nobody can capture it. It's just, QuickBooks can say, actually, that's ours, but it's not. They're just using the whole double entry, single, double closing entry system is inside QuickBooks, it's inside Quicken, it's inside Sage, it's inside, I don't know what, it's not inside, because that is not capturable. It just exists as a kind of logic. So, so no one can actually intervene at this point. Bill Gates can't say, excuse me, that's mine, I want 10% on it. It's just not possible. So, and it's a bit like, if I think of Word, Word's great. You can call Word if you want, but the English language is not yours, and it doesn't become yours by you putting it inside your computers. Something like this. There's an innate, even kind of mysterious in that sense, fact of accounting, and this is hugely disciplining of the human being. And this is the only way I know to get traction, and especially it's the only way I know to critique myself, or you to critique me without you interfering in my destiny. So if I show you my accounts, you can say, funny, every month you never make your sales, Christopher. Are you bothered by this? I'm not bothered. I'm just looking at your numbers. I'm intrigued. You never make your sales. That's your problem if you don't. But doesn't it bother you, right? Or don't you want to do something about it? And if you want to, you can just recast your, reforecast, or say, oh, that's because I'm trying to be a carpenter. In fact, I should be something else. So I keep the same line item, the same income expectation. I just change the way I'm going to get it. And so when you get into it, it's an amazingly powerful basis in which I can shift from this, let's say from this self-centeredness to a kind of picture of myself from outside, which I'm now managing at my speed, at my pace, with no consultants, no therapists in this story. It's just me saying, oh, okay. And I'm opening a window, which I'm immediately going to close. But this is one of the most important things about financial literacy. It enables us to make this shift, or to expand our kind of narrow image of ourselves to a much wider one. And I can go into that in more detail if we have time to talk about double entry and so on. But it's very important to know that is hidden behind here. And maybe at some point on this, before we end this project, I should explain that. But now I just want to add one last thing, which you've all been waiting for. So what does Rudolf Steiner say about money? Because I think hopefully I haven't said anything about that. And the one, he says quite a few things about money, but the one I want to mention here is towards the end of these 14 lectures, which we're sort of coasting alongside of. I'm not being methodically, I'm not tracking them methodically, but towards the end, he starts talking about, at this point in our history, money has become bookkeeping in the very abstract sense of bookkeeping today. Like when you do bookkeeping by hand, obviously you've got pen and paper and columns, and I grew up in the days when there was a system called Kalamazoo, which is a great big plastic thing, and it had 3 layers of paper, and you wrote your item in here, and it was copied 3 times. You know, it's a huge laborious thing to do. Now it's hidden inside a computer. I don't know what it is, blips that go this way and blips that go that way. But when you press for your balance sheet, the computer makes it look like a balance sheet. That's not what the computer's got inside it. No way, obviously. And it makes it look like on the screen, like it's a piece of paper. All this totally, who knows what's going on inside these computers with all this kind of binary technology. I don't know what's going on inside, but it has to render it in an old-fashioned way. Otherwise, there's no way you can see. So in fact, the technique of bookkeeping is way ahead of our consciousness already. And for us to understand it, it says, okay, let's go back to where you were, and now you can understand where you are. Meaning it's totally invisible how it's now done in a computer. And now Steiner's point is, he doesn't talk about that because it's before his time, but his point is money is now bookkeeping, pure and simple, and they're synonyms for each other. So here you're looking at money. So stop looking for the coins in your pocket or the dollar bills in your wallet or your bank balance. This is already money. Conversely, if you do bookkeeping, that is money. They are just like this. The one is the other.